tomorrow we will continue and we will finish the rest of the half of the class, like unit 5. We will begin, we'll continue, we'll complete tomorrow, by tomorrow. Okay, so here the block 5 contains unit 12, 13 and 14, and unit 12 focuses on verification and valuation of assets. So generally, what do you mean by assets? Yes, ma'am. See, the class must be interactive. Whatever you know, you can tell. Shweta and Sumanasri. What do you mean by assets? All of you, all of us, we will possess so and so assets. Like for example, uh, any plant and machinery, it will be an asset. Land and building, it will be an asset. So here we'll discuss in this unit the verification, how the auditor will verify and value the assets. So here the primary duty of auditor to report regarding the balance sheet. So the balance sheet is the statement. It exhibits or it provides true and fair value of various assets and liabilities. So here the auditor has a primary duty to verify the physical existence of the assets along with the documentary evidences. If I purchased any asset, generally it contains the voucher, right? It contains the voucher. So that voucher is the evidence that we purchased so and so asset, and the owner of the asset, the title, and when we have purchased date, and we will have warranty and guarantee description in the total voucher. So here the auditor should ascertain the balance sheet, whether the items recorded in the balance sheet are correct values according to the assets existing in the business. See, for example, assets worth is 20 lakhs, which are in the books of accounts. Whether the same 20 lakhs is being exhibited in the assets side of the balance sheet or not, it must be checked by the auditor. Name of the asset and it's a voucher. So there will be multiple types of assets. We won't purchase any one or two assets. The organization will purchases various n number of assets. So the auditor role is to verify the total assets along with the vouchers. Is it clear, ma'am?
Yes, ma'am.
Okay. So generally here, as we are saying that verifying, checking and tallying with the voucher. So what are the main objectives of verification? We will discuss. So generally the verification, objectives of verification is to verify the assets, whether they are existing in the business and in the balance sheet, they are picturing, whether with the evidence it is tallying or not. So in the introduction itself, I said that evidence of the existence of the asset as the date of the balance sheet, which is done by physical examination. So the auditor will examine the assets existence with the voucher which is documented by the business concern, and physical examination, whether those assets are existing in the business concern or not, and some assets will be sold by the business concern. But even though if they are showing in the balance sheet, then the auditor will identify that the asset was sold. Next, next the concept here, the main objective is the ownership of the asset. Once we get ownership rights, the ownership of the assets, the owner of the asset, who under whose name we have taken the assets, it will be examined along with the legal and official documents. Okay, existing the assets, okay, that is fine, but it was existed with whose name? It will be checked by the auditor. Next here, third objective is evidence as possession of the assets and to see whether they are free from any charge. It means here, if that assets are independent or if that assets are kept it as a mortgage, then here the auditor will examine whether the assets are in the possession of the business concern or in the possession of the mortgager. So here, if it is possessed with other party like third party, then here the books in the books of accounts, the values and certain will be like as a fee to the third party. It will be checked. Next, evidence with regard to proper valuation of assets. So here, evaluation of the assets will be done under the fourth objective. See here, valuation of assets. See, worth of the asset will be identified. Worth of the assets will be identified. Someone asking important questions, I will give you, ma. Definitely, I will give you tomorrow, 10 to 15 minutes, I will discuss with the important questions. Don't worry. Next, evidence for the proper accounting of the assets. So, whether that assets are accounted and recorded properly in the books of accounts or not, it will be verified. Next here, how the auditor will verify. So auditor will get an idea, a complete idea by considering the accounts and financial statements. So the organization contains various accounts. So like books of accounts, those will be collected by the auditor from the business concern, and the auditor will examine the financial statements and he gets complete idea by the financial statements. Next year, we are for saving the business from unscrupulous motives. If any unexpected or uncertainty occurs, so the business will allocate certain fund to overcome the uncertainty. So that is also main objective while verifying whether the auditor will check whether they kept a certain fund or not. Next, authenticity of records. See, they recorded so and so amount. Whether those records are fair and true or not, it will be examined by the auditor. See, objectives of verification. Is it clear, ma'am?
Yes, ma'am.
Okay. Okay, fine. Next, we go with the another concept that is here. There are certain distant differences. We will discuss those aspects. Next, here we have differences between verification and vouching. So, distinction between verification and vouching. So, in general, both seems similar, but they are not same. Now, we examine what is the role of verification and what is the role of vouching. So, vouching means here in the last class, we have discussed that it examines the entries, various entries of transactions recorded in the books of accounts. For example, purchase entry, sales entry, purchase receivable, sales receivable, like that here, wages. All these entries are being recorded in the concerned books of accounts. That is vouching, posting the transactions. Whereas verification, verification focuses on assets and liabilities, which are appearing in the balance sheet, which are existing in the balance sheet. Vouching focuses on the trading and P&L account. Whereas here verification focuses mainly on the balance sheet, that is assets and liabilities. The items which are mentioned in the assets and liabilities, whether they are recorded properly or not, it will be examined. That is known as here verification. Next, time. So generally, time concept is most important whenever we involve in any business aspects. Not only auditing, not only verification, not only watching. Time is most important. So if we manage the time, we are the big achievers. So time means here watching is done throughout the year. Yes or no? See, throughout the year, the transactions will take place. One transaction or the another, it will take place. Whereas verification is done only at the end of the year. At the end of the year, after preparing the balance sheet, so verification is done. That is the difference among the watching and verification. Watching is continuous process. It is done throughout the year, whereas verification is done at the end of the concerned accounting year. Next, what is the basis? What is the basis for watching and verification? We discuss now. So here, the basis is here to watch or to record the transactions in the books of accounts. So we consider the documentary examination, whether those documents are supporting or not. So we are entering that purchase returns, whether the actually purchase returns took place or not. We can come to a conclusion with the help of evidence. Next, whereas verification is based on personal as well as documentary. See, physical examination of assets, that is known as your personal examination, personal consideration of whether the assets are existing or not. It will be checked. That is the major difference between watching and verification. Next, valuation. So here, watching does not include valuation. As we know that watching means whether the particular transaction is recorded or not. It will be checked, it will be done in the watching. So here, next year, when coming to the verification, here the verification considers valuation also. The valuation of worth of the asset and worth of the transaction, it will be checked. That is a major difference between the watching and verification. Next, fifth aspect is personnel. Who will involve in the watching and verification? So here I have mentioned, it is very clear that watching is done by the juniors and assistants like clerks, and whether the articles are existing or not, it will be checked. But whereas verification is done solely by the auditor himself. Is it clear, ma? Differences, is it clear?
Yes, ma'am.
Okay, fine. We will go with the another concept. Next, we have another difference here. Differences between distinction between verification and confirmation. So just now it is very clear that verifying whether physically existing or not, whether the asset worth valued properly or not, it will be done under the verification. See here, auditor will check whether the certain assets are existing or not. So here, confirmation means here, generally confirmation is done for the intangible assets. So what are intangible assets, ma? Tangible assets means which we can see, which we can touch. Intangible assets means like copyrights and goodwill. We cannot see and touch. So confirmation is done under the aspects of intangible assets. Next here, is it clear, ma? Shall we go to the next concept?
Yes, ma'am.
Okay. Next one, the unit focuses on the valuation of assets. So generally here, the balance sheet contains the worth of the total assets and liabilities, which are existed in the business concern. So here, valuation is important concept which will be considered by the auditor. In the audit process, valuation of assets is the most important and precious item, because we can assess the company's growth or company's efficiency, company's what we say here, company's financial performance based on these, based on the balance sheet we can assess. So here the assets which are existing in the balance sheet, it must not be overvalued and it must not be undervalued. So it must be according to the worth of the value of the asset. It must not be recorded more. It must not be recorded less. So if they record wrongly, so it will give wrong picture in the minds of the investors, in the minds of the consumers, and in the minds of the creditors, board of directors, and shareholders. So sometimes the business concerns will do window dressing. It means here they don't have so and so assets, but sometimes they will show that they contain so and so assets, because to encourage the investors to invest in the company, they will involve in the window dressing, but they cannot continue that process for a long time, because auditor will enter and auditor will identify the various values of the assets. The main idea behind the valuation of assets is to bring the clear picture in the minds of the consumers and in the minds of the society regarding the business concern. Next here we have valuation. Generally, valuation should follow the verification of fixed assets. So here we can value, the auditor can value the assets worth based on the, if he verify the fixed assets which are existing with the concern, so the auditor will get an idea that worth of a particular asset is according to the evidence or not. So firstly, the auditor has to compare the ledger accounts books with the balance sheet values. So if it is tallying, if it is same, then here he can give a green signal that okay, that item is okay. Next, again, the next item he will verify is whether that asset is physically existing in the business concern or not. Just now we discussed that the assets will not be there, but the business concern will show in the books of accounts, in the statements, that there are so and so assets. So auditor not only check documentary evidence, but also he will assess, he will get confirmation that physically they are existing in the business concern or not. Next one here, whether that asset is existing, then it is under whose possession, it is under whose name, and who is controlling that particular asset. Generally, the business entrepreneurs, the equity shareholders, and the owners of the business concerns, in the names of the owners of the business concern, the asset title will be. So, whether that asset is independent or the asset is mortgaged, it will be checked by the auditor. Next here, whether the title means here it is under whose name. So the name of the client, title means here name of the client. See, for example, we purchased a two-wheeler or four-wheeler. So the title will be in our names. In the same way, if the business concern purchased an asset, the title will be in the names of the owners. So whether the asset existing or not, whether if it is existing, whether it is independent or it is a mortgage, and the asset will be under the whose name it will be checked. Next, whether the most important point is purchasing asset is okay, that's fine, but whether that asset is used for the business concern or not, that is the most important point here. Yes, they purchased, whether they are using in the business or just they are rotating that asset for the further purposes. The auditor not only checks the worth of the assets, but also such assets are being used by the business concerns or not, it will be checked. Next concept is here, we have uh, uh, various methods like in order to value the assets, there are various methods. We will discuss the various methods. In the further concepts, we will discuss. Next year, first we will discuss the various assets, then after we will discuss the methods of, so these are the assets like land and building. So generally, the land and building, the auditor will verify whether the land and building are according to the title, according to the names, whether they are existing or not. See, generally the land and building, the building of the organization will be in the names of the owners. If the building is taken on a rental basis, then that is the concept again, rent paid, whether the rent amount paid or not, in expenses he will check. If it is owned, then the auditor will verify whether the client name is existing in the title or not. He will examine carefully. So generally, if the asset is mortgaged, it is kept with someone for the obtaining money to the business concern. So the certificate of mortgage will be verified by the auditor. Next here, the other assets we will see, we have plant and machinery. So the plants, the organization will purchase various plants and machineries. Whether those plants and machineries purchased, it is recorded in the books of accounts or not, it will be checked by the plant register. So there will be a register for every item in the business concern. So whether those assets are that registered in the plant register or not, it will be compared by the auditor to assess whether that asset is existing or not. So if some generally some machineries, if it is not working well, or if we want to purchase new machineries by selling these outdated machineries. So when we sell those machineries outside, so the date of sale and generally the asset plants or machinery, every year its value will decrease. That is known as, here we call it as depreciation. So decreasing the value of an asset is known as depreciation. So here the depreciation value, and by examining, and that will be examined carefully by the auditor. So by selling that asset, whether they are getting profit or loss, see they used for 10 years. And the 10 years, if they purchase, if they take on rental basis, amount they compare. And now the cost of the plant they compare. And by selling, how much they are getting, the value in the market, what is the price for the second hand machinery. They will examine carefully whether by selling they are getting excess to their investment or less to the investments. If it is getting excess, then it is known as profit. If it is getting less to their investment value, then it is known as losses. This is the second item which we have in the assets point. Next, motor vehicles. The auditor will also verify the various motor vehicles which are existing in the business concern. So here the auditor can get a documentary evidence with the motor vehicles register. So if he check the motor vehicles register, then he gets that each vehicle certificate, whether registration is done or not. Then if the registration is not in the name of the business entrepreneur, then auditor should verify the charges, the charges and whether vehicle, whether the vehicle is under the whose name it is, and for what purpose they have not taken the entrepreneur name. That will be checked. And in the same way here, the depreciation concept, the depreciation rates for the vehicles, as the vehicle is also an asset, it will, as we use, it will get repaired and its value will decrease time to time and year to year. So the auditor should verify that all the vehicles are used for business purpose or not. So this is the most important aspect. Purchasing the assets is one thing and it must be used for the business concerns. Next here, those are the assets. Now we take the fixed assets. Those are the now verification and valuation of current assets. So current assets are those assets which are used by the business concern for the day-to-day operations of the business. See, for example, to purchase any stationery or to purchase any material required. So the cash in hand, the first item under the current assets is cash in hand. So what is the worth of cash which is existing in the hands of the entrepreneur? That will be verified by the auditor. So after utilizing that cash, if they are utilizing that cash to be various purposes, whether the cash anything is left over, or if at all if they are in excess need of cash, so how they are managing, everything will be noticed by the auditor and will get confirmation from the management. He takes oral statements and also the auditor will also consider the bank statements. So generally the concept of fraud will take place with the concept of money. Where money involvement is there more chances will be there to occur the frauds and to misappropriate the cash. So here, cash manipulations and frauds can be identified with the help of bank statements and transactions which are existing in the books of accounts. So with the help of documentary evidences, auditor will keenly focuses on the cash aspects. Next here we have loans and advances. Loans and advances of the loans and advances. So if the loans and advances given by the client, so the auditor will examine the business if it is given loans and advances. The auditor should verify in case the loans to the directors or to the employees or to whom they have given, and whether the recovery procedures. So the recovery of the loans and advances, what techniques they are applying, and on the particular time period in the past 1 year, what are the loans and advances? It will be examined by the auditor. See here, once if the business person given a loan or advance, if it is not recovered, then that is also here, it fetches the financial performance of the organization. So it must be, see for example, if the loan is given to the employees, they will put a condition that they will reduce from their salary every month so and so friction of amount. So that is about here loans and advances. Next, stock in trade or inventory. So the next current asset we are going to discuss is inventory which is existing in the business concern, like raw materials, work in progress, finished goods, and the spare parts or loose tools which are existing in the account of inventory that will be checked in the inventory book, whether the statements are maintained correctly or not. So it will be verified by the auditor. See, inventory, in the concept of inventory also, there will be chances of errors. They may manipulate cost of production, and sometimes they may omit to record so and so entry, and sometimes they may miss verifying the quality, quantity, and value of inventory. See, as the assessing the value of inventory is difficult task. So sometimes it is, as it is a time-taking process in the busy schedules, or as it is a lengthy process. Sometimes in hurry burry, if they record, then here also there are more chances to occur errors and to occur the mistakes. Next, we have another one. Now we discuss the methods of valuation. So methods of valuation of various assets. Till now we have discussed what are fixed assets, what are current assets. Now we are going to discuss based on which method they are evaluating the various assets. See, these are the list. How many are there, ma? How many types of methods are there?
7.
7 types. Very good. So next, first one is the cost price. So the price paid for purchasing an asset, that is known as here cost price. See, for example, now it is summer season. So for a business concern, if they need coolers or if they need ACs, so we go to the particular store and we order so and so number of assets. So the price which is existing, the purchase cost and also installation cost is also included in the cost price of the asset. So machinery they purchased. So to install the machinery, there will be other additional charges. So to purchase that machinery, there will be, for example, worth of the asset is 2 lakhs. To install, if it is incurred 10,000. So the total cost price will become 2 lakhs 10,000. So next one, under the market value price also, we can value the assets. See, for example, the market value, if the amount which is the asset is fetched, if it is sold in the market, what is the current market price? So that is known as your market price. Next, replacement price. It is a price which particularly here, if an existing asset is replaced at the end of its life, then here replacement price will be differ. So if the life of the asset finishes, then we replace the another assets. So that values also will differ. Next, book value. In problems, we listen book value, market value, like historical value. In the accounting the problems, we listen all these types of methods. Next, book value means here, see, when an asset is appeared in the books of accounts, what is the worth of an asset at that point of time? Generally, the book value means here, it is usually the cost of the asset minus depreciation. If we deduct the cost of the asset minus depreciation, we get the book value. Next, historical value. So historical value, it is like going concern value, and generally here it is also same as book value. Here there will be no changes in the prices, like fluctuations in the prices of assets taken into consideration to assess the value of the asset. There will be no fluctuations in the prices of the assets. Fixed aspect, that is known as here historical value. Next, realizable value. This is the same as like market value. See, it represents a value that the asset when it is sold. For example, when we sold an asset, it will, if it is sold for so and so price, that price is known as, that value is known as here realizable value. Next, scrap value. So if the asset is sold as scrap, see, when we call the asset as a scrap, when we have no use with that particular asset. There is no use to the business concern. Means it is not in a working condition. So at that time, that when that particular asset will not be in the existing mode, we have an say that asset value service or this also influences the service value of an asset. So that is known as your scrap value of an Esma, is my voice is audible?
Yes, ma'am.
Excuse me, ma'am. There is issue. I am unable to connect within
Time period.
time
So
period. So now we continue.
is
Is
my
my
voice
voice is audible, ma'am?
Esma, is my voice is audible?
Yes, ma'am.
Okay, fine. So now the next aspect is basis of valuation. So assets methods we have seen now. What are the methods of assets? What are the assets methods, ma? Just now we discussed.
Cost price,
Yes, very good.
market value,
Okay,
replacement value,
okay, good.
book value,
Okay,
next is historical value,
historical value, scrap value,
scrap
replacement value.
value. Yes, ma'am.
Okay, fine. So, how do they assess that assets? How do they, what is the base for the valuation of assets? That is the concept of here, basis of valuation. So, generally, it will be valued by considering the original cost of asset. So, what is the original cost which was existed with the asset? It will be considered next expected working life of asset. Generally, the for some assets working life will be 20 years, for some assets 5 years, for some assets 15 years, like that. Based on the life of the asset, the valuation will be done. Next, wear and tear of the assets, like for example, by utilizing the assets. So there will be certain expenses, and sometimes we will replace it. Next, scrap value. That is also most important to value the assets. So generally, scrap will be existing. So we need to consider the scrap value. Next, the another point is here the changes of the asset. So if see here, if the asset is outdated or obsolete, if it is not working, we change the we replace the asset with the new asset. So based on this new asset value also the valuation will be done. Next, the another point is accounting methods will be applied in order to adopt or in order to evaluate the worth of the assets. Next here, verification and valuation of fixed assets. So this is the most important point. So generally, we can verify and the auditor can verify and evaluate the fixed assets by comparing two items, that is ledger accounts. One is ledger accounts balances with the balance sheet values. Whether the ledgers balances and balance sheet values are tallying or not, that will be keenly checked by the auditor. So if the ledger account is showing another balances and if balance sheet is showing another balances, then under that situation, chances of missing any transaction or omitting any transaction or under recording any transactions may be taken place intentionally or unintentionally. Next, while verifying and evaluating the fixed assets, physical existence must be considered into the account while we verify the books of accounts. Whether the assets shown in the statement and assets existing in the books of accounts are matching or not, it will be keenly observed by the auditor. Next, the another aspect is here whether the asset possession in the initial classes we have discussed title of the asset under the client name or not, and whether that asset is in the control and supervision of client or not. It will be observed by the auditor. Next, the another thing is here whether the asset is mortgaged or asset is independent. Title of the asset, next name of the client for the particular assets will be assessed. Next, whether the assets are used for business concern or not. Is my voice is audible, ma'am?
Yes, ma'am.
Okay, fine. So these are the key points. What are the points that will be considered by the auditor while verifying and evaluating the fixed assets? Yes, ma'am. What are the points that
Comparison of consider account,
uh,
balances with the balance sheet value and verify the physical existence of the assets.
uh,
Whether the asset is in the possession and control of the client.
okay. Good.
Whether the asset is monitored.
Mortgaged or independent. Okay,
Yes.
good.
Whether the
Okay,
assets are used for the business.
okay. Okay. Fine, good, good. Next, there are some other concepts also. So, objectives of verification of inventory. So that is also inventory aspect also we consider here. Whether the stock mentioned in the books of accounts are according to the physical existence or not. Whether the stock is in the godown, stock is in the business concern or not, it must be checked. So here also, in the concept of inventory also, the chances of frauds and errors, mistakes will be done more here. Next, the value of stock, whether it is correctly considered or not, whether the correctly recorded or not, it will be assessed by the auditor. So this is about here block 5, first part. So in the tomorrow's class, we discuss the liabilities concept in the balance sheet. Today we covered assets. Only assets we covered. Tomorrow liabilities, and also I will cover report writing, audit report. Whether the auditor will consider what are the elements in the audit report. So important points while preparing an audit report. So in the tomorrow's class, we will discuss. Now it's the time for important questions, right? Yes, ma'am. You need important questions?
Yes, ma'am.
So before giving important questions, do you have any doubts in the today's class? Is the content is clear to you? Students, interact with me. I am waiting for your answer. Yes,
Yes,
okay.
ma'am.
So Shweta, no voice, only text she is giving. Okay, fine. So what about Sumana? Is the content is clear to you?
Yes, ma'am.
Surya, content is clear?
Yes, ma'am.
Okay, fine. So Surya, you have given mail ID to me?
No, ma'am.
You give your mail ID, I will mail you the notes. And block 4 notes just now.
By 6:30, I have mailed you, ma. You check it out. Block 4. You type your mail ID, Surya, in the chat box so that I will send to you also. So now, as you have no doubts, now we go for question and answers. Note down. All these questions are important. You note down. Put it on paper so that it will be better practice to you. Okay, I have noted. I will mail you, Surya, to you. Surya Kant, I will mail you the notes.
Okay, ma'am.
Okay. So take down the questions, ma. Note down all of you. Esma, have you taken?
Yes, ma'am.
See, in our university textbooks, which was provided to you, it is very clear. Uh, the thing is, you have to read the concept and you have to underline the core points, and you have to remember those core points when you prepare the particular question, so that you won't feel the concept is lengthy. So in the last class, Sumana Sri said that the concepts are lengthy. So if information is more, that is no problem. If the information is concise, you cannot read. So you have to do one job is you have to highlight. You have to take pencil. You highlight the points which are important and which you can focus in the exam. That is one of the technique. And all of you tomorrow, I don't know whether I find time or not. So now I want to take 1 minute time to you. So determine your goal, work for that goal, all of you. So tomorrow you will ask some important questions and we will be busy with the syllabus explanation. No problem. Anyhow, you have my mail ID. But the thing is, without goal, there is no future to you. So you are interested in which specialization, you are interested in which aspect, you have to identify first. Then you work on that particular objective. So I wish you all the best to you. So tomorrow you have to tell your goals. 1 minute I will interact with you. As you are final year students, I want to know your future goals. Will you participate to in the tomorrow's session? Will you explain your goals?
Yes, ma'am.
Okay, fine. So I think you have understood the concepts.
Yes, ma'am.
Okay. So shall I give break to you then for next class, or
Yes,
you
ma'am.
want, to interact for 1 more minute? If you have any doubts, you can ask in general. 1 minute we have time. In 3 minutes, you can join the other class. Tomorrow you interact then. You think today and tomorrow you interact, try to interact with me. Okay?
Okay, ma'am.
Okay, fine. So that you be ready for next class then. Take small break and we will meet tomorrow. So I am feeling that this 1 week time, it was went very fastly. So I am thinking that even Sunday I have a class, auditing class.
No, ma'am. By tomorrow it is the end last class for us.
Tomorrow is last class, but in my mindset, I am feeling that still we have classes. Okay. Anyhow, I wish you all the best then.
Thank you, ma'am.
Okay. Okay then. Okay, ma. So you take break then. You leave the meeting, take break.
Yes, ma'am.
Okay.